And let's move on to the markets. We did see that market fall back on Friday, and it has continued that bear run today. The NSE All-Share Index closing at 35,836 points today, down about 0.9%. This was as a result of losses seen in companies like Nestle, Nigeria, CAP, Flour Mills, Presco, and UAC. We did see some gainers though, and those included Guinness, Nigeria, and Nigerian breweries. Let's now cross to the Nigerian Stock Exchange, where David Andori, General Manager at Lambeck Trust and Investment, is standing by to talk us through his thoughts on today's trade. Thank you so much, David, for joining us. I did mention earlier that the market fell back, so we're seeing a bear run beginning to develop again after the bounce that we saw last week. What's your take?
Thank you very much, Wale. It's a pleasure being with you. The market has actually continued the correction which started about 2 weeks ago. We saw a major correction occur at the later part of last month, although there was a little respite in the last 2 or so days end of the month. But however, it does appear that the BS descended again on the market today, and most of the stocks that were affected were actually those stocks that had become inflated when the persistent bull run occurred in the market. If you see a lot of those stocks today, they appear to have suffered some deflation, so to say. So
okay, so you're calling it a correction?
Yes, I would ascribe it to a continuation of the correction that started about 2 weeks ago, although that correction was actually forced on the Nigerian equities market as a result of events that occurred in the international capital market, based on issues around the quantitative easing by the
absolutely. That's of course been discussed at length on CNBC Africa, but let's talk about some of the sectors that seem to be outperforming in recent days. We did see the insurance sector outperform the market on Friday. Today, we're also seeing it do well. Of course, we're expecting some numbers from that sector. We've only seen 2 companies release numbers so far. So your thoughts on what this means for the insurance sector? Do you think this could be an opportunity for those investing in that stock, in that sector rather, to see the market, to see that sector rally a little bit?
Yeah, perhaps because the insurance sector has suffered very severe decline in the recent past, and is also clear that that sector appears to harbor a lot of companies that have so far not released their full year result for the year ended December 2012. As a result, a lot of investors have been jittery. But perhaps now, several investors seeing the potentials or opportunities in the low prices at which most of the securities are selling in that sector.
Are you bullish on that sector? Are there stocks in there that you like?
We have some companies that have been resilient all these years, like Custodian and Allied Insurance, Continental Reinsurance. Of course, Mansard has always been up and doing. So a few of such companies, and ICO, of course, let me not fail to identify ICO as one of those stocks in the insurance sector that have maintained very good standard. But so far, a lot of them are yet to release their full year results, and that was what panicked investors who divested a lot from that sector. But some of them, in the belief that perhaps the full year results will start hitting the market, have started coming back.
All right, so the market falling back on the first trading day of this third quarter. How do you see it performing over the rest of the quarter? We do know that banking results should begin to come out in the next couple of weeks, and that hopefully would be a catalyst for the market. But then again, some people are pointing to the fixed income market and where yields are right now.
Yes, indeed. The yields are getting a little attractive again in the fixed income market, in line with the rising inflation rate. So assets can still migrate from equities to fixed income. But however, the market started very slowly today. If you observe, you will recollect that the first half of the year was such a return to a very spectacular performance in which the market actually attained the same level for almost the whole of last year. But we know the factors that propel the market may not be present in the second half of the year. Essentially, the kind of price-sensitive information that are likely to drive the market in the second half of the year will be the quarterly results that will be released. And if there are developments in the domestic macroeconomy, and of course the global macroeconomy that can positively impact on equities.
But what's your outlook? Are we gonna see a better quarter than we saw in the second quarter?
No. Those factors that propel the market in the first half are definitely not going to be present in the second half. So I see a market that will toe the line of the traditional trend of slowing down a little bit as we enter the months of festivities.
Right, but is there anything in particular that worries you in this second half of the year that you think could be a major dampener for the market? You have mentioned the higher interest rate environment and where yields are. Is that the big thing for you, or are there other factors?
Yeah, you know, when you started your report on the Nigerian economy, you mentioned the situation in the oil and gas industry, the theft and the decline in production. Of course, that will affect the revenue to the country. And analysts who have studied the trend in the past have seen correlation between the fate of the Nigerian oil and gas market and movements in the equities market in Nigeria. And so if there are positive developments in the oil and gas sector, of course it will trickle down to the equities, and that could impact positively on equities. But with the kind of news we are hearing now, it gives one a lot of cause for concern, and that may affect the equities market.
Right.